According to the World Bank, there are about 719 million people living in extreme levels of poverty worldwide, and that simply means that they can't afford to spend anywhere beyond $2.15 every single day. And so in today's video, we're going to look at the 7 reasons why you have to tackle poverty, and then more importantly, to do one thing or to deploy one strategy that the ultra rich use a lot, and that is investing in the stock market. And so if you're new here, my name is Nana. I hold a master's degree in business finance, and on this channel we discuss everything personal finance and personal development. And so, for the avoidance of doubt, investing is a process of actually having to earmark funds or setting some funds aside, usually to buy assets with the intention of benefiting from dividend income in the future or gaining some form of returns, be it rental income or capital appreciation in the future. And the ultimate aim of investing is to actually make sure that your money actually works for you. So as you're working so much to earn money, the intention also when it comes to investing is to make your money actually work for you, so that subsequently you'll be able to push yourself further towards the attainment of whatever financial goal that you have in life. And with the understanding that we have, it is also noteworthy to actually touch on what the misconceptions of investment actually are. So most people out there actually feel like investment is for the rich. That is not true, and you don't need hefty sums of money to actually start investing. Also, what you need to know is that investment is one of the key ways or the strategies that you can deploy in order to reach your financial destinations faster, much more effectively and efficiently. And so with all this said, we move to the first reason why you should actually start investing, and that is because investing actually helps you to build wealth faster and much more easier. So let's take it for instance that you have the goal of buying a house, and that house is valued at £250,000. Holding all other factors constant, you would have to put down a minimum deposit of about £62,000, and that is the 25% required minimum that the banks would actually consider before granting you a loan. So what you need to know is that if you're to save this £62,000 within a space of 6 years, that would amount to 10 grand every single year. However, if you're to invest 10 grand every single year in the S&P 500 at an annual rate of return of 7%, you'll be able to actually reach that £62,000, that is the minimum deposit required, within probably 5.5 years. So you still have a couple of months of your years that you can actually use that money for something else. So investing would actually lessen the time that is taken for you to reach your financial destination. And then saving would actually sometimes not even get you there, because inflation will subsequently kick in, and we will be discussing that in the next point. This brings us to the second reason why you should start investing, and that is simply because investing actually helps to protect your money against inflation. And for the avoidance of doubt, inflation is an economic term that is used to describe the rate at which the prices of goods and services in an economy rise over time. So holding all of the factors constant, the prices of the goods that we actually buy, the services that we consume, the rent, the water, our gas and electric are likely going to go up, and your income might not probably rise as much as inflation would. So what that simply means is that if you're to just put money in a savings account with a bank, you're actually not earning any form of interest in that regard, which means that over time your purchasing power actually reduces. So the only way to actually ensure that your money and your financial progress generally is protected is to actually invest your money, simply because that money would attract some form of interest to offset the damages that are actually caused as a result of inflation. So overall, holding all the factors constant, the money is growing and inflation is actually kicking in. So it balances it out so that you don't actually end up losing money in the end. This brings us to the third reason why you should start investing, and that is to help to actually achieve your financial goals. So for most people out there, according to research, only about 8% of people who set financial goals eventually see the realization of that goal. And so if you truly want to join the 8% of people who do realize their goals, there's one thing that you need to know. You need to know that investment is nothing but the ultimate strategy that can take you there. And the faster and the earlier you actually join and start investing, the better it will be for you to reach your financial destination. This brings us to the fourth reason why you should start investing, and that is because it simply helps you to also diversify your income streams. So with the influx of AI, everyone is at risk simply because most companies are actually moving away from labor and they're actually going into AI automation. So they're trying so much to automate several processes within their production systems. And that simply means that there will be less jobs for people in the next couple of years. According to a research by Goldman Sachs, by 2045, there will be about 50% of the global workforce, that is, people that wouldn't have anything to do, they will be laid off simply because AI will be taking over their jobs. And that is the ultimate reason why you need to start investing now. You need to tie your financial fortunes together with all the big companies out there listed on the stock market and try as much as possible to make sure that you don't rely just on a single source of income that will subsequently protect you from living paycheck to paycheck and eventually steer you towards the attainment of whatever financial goals that you have for yourself. This brings us to the fifth reason why you should start investing, and that is simply because it helps you to actually also benefit from economic growth and the market growth altogether. So over time, the economy actually expands, and that simply means that most companies actually make more money. So if you truly want to build wealth and to become actually sustainable when it comes to your finances, the ultimate and the most prudent way to go about this is to tie your financial fortunes to these companies by owning portions of these companies so that subsequently when they make their profits, then they can actually share their residual profits with you through dividend payments and several other capital appreciation methods that may actually be available when you actually start investing in these companies on the stock market. This brings us to the sixth reason why you should start investing, and that is investing actually helps you to prepare for emergencies. So according to research, about 60% of people in the US economy don't even have any emergency fund. That is, they cannot actually pull out $500 to $1,000 if they are to fall into any emergency. That is simply they are living paycheck to paycheck. And that is a very dangerous position for you to be in financially. So if you truly want to escape this rat race and the life of having to live paycheck to paycheck, then investment is one of the surest ways to actually follow, simply because it would actually help you and push you above the level of economic subsistence and then finally liberate you by pushing you towards financial freedom altogether. This brings us to the seventh and the last reason why you should start investing, and that is simply because investment is the only vehicle that will take you towards financial freedom. So one of the key things that you need to know is that just investing or putting your money aside and getting your money to work for you is one of the easiest and the most effective ways that you can actually build wealth. And that is why all the ultra rich people out there are actually investing in the stock market. So psych yourself and try as much as possible to start early. Start small, but make sure that you consistently contribute periodically and then ensure that you're always staying disciplined when it comes to expenses. So you need to cut down on any unnecessary expenses and then save or invest the excess thereof. And so with a general understanding that we have of what investment actually is and how it can actually be beneficial to us insofar as the pursuit and the attainment of our goals is concerned, then you go on to ask yourself, how then can we actually save money, or how then can we purchase shares on the stock market? There are several ways that you can actually get this done, but the two ways that I recommend is one, you can just phone your bank and then ask them for assistance when it comes to investing in the stock market, and they would have several other products that you can actually buy into, which would also grant you some form of dividend income or some interest to also protect your financial progress against inflation. Secondly, what you can do is to actually pick stocks or invest yourself. And so one key thing that you need to know is that when it comes to investing, one of the greatest things that Warren Buffett, who is the richest man when it comes to investment, is actually going on to advise is that you actually put money simply into an S&P 500 index. And the S&P 500 index is the top largest companies in the US economy, and these are the most performing companies. So once you put money in there, your money is actually protected and the risk is extremely low. However, it actually grants you also 7% annual rate of return, holding all other factors constant. And so your money is actually growing way higher than what inflation currently is within the year. And so what you can simply do is to go on to your App Store or Play Store and then download a brokerage app like Trading 212 or eToro, set it up, and then link that to your bank account, and then periodically do what is called dollar cost averaging. So you can actually set a periodic automated payment so that every single week you contribute $10 or $20 into the stock market. And that is one of the surest ways to actually start investing. All you have to do is to start small, stay consistent, and then over time, just ensure that you're disciplined enough to stick to your financial plan. And I believe that you'll be able to sail or probably just steer yourself towards the attainment of your goals. And so thank you for spending time with us. I have a whole video on how you can actually get this done, and I'll link that in the description to actually help you to subsequently make sure that you set up your brokerage account. And so once again, thank you for spending time with us, and see you in the next video.